Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Bob Scarborough.
And we are the FAIRtax guys. You've got your scrolling banner, and I still have my Mega Minx.
That's right. That is the most amazing thing. I can't wait to see it in person. It
We'll
looks like a
bring this up
geodesic dome.
Well, it's a dodecahedron if you're into solid geometry, but I will bring this to the radio station in October, and I will solve it right before your eyes.
I was never solid. Yes, we want to get a video of you doing that. We'll post it on the YouTube channel.
All right,
and it'll show you that this is easier to dive through than the federal tax code.
Much easier than the federal tax code. So, speaking of the federal tax code,
are you on a mailing list for that type, those Rubik's cubes and everything? Do you get?
No, I just get them off of eBay, and there's another online store that has all kinds of cubes and cube-like puzzles. So I got about 3 dozen of these things anyway, so I don't really need any more. But you mentioned in just a second that going back into the tax code, which sets up perfectly our first segment, Congress.gov. We're going to go look and see what the Congress critters are trying to do to the tax code. You go to Congress.gov, put the words Internal Revenue Code in quotes in the search bar at the top. Make sure you've checked only legislation in the current Congress over there. And then again, as of the day we are recording this, 1,711 hits on that search, including this one. Let's see. HR 7881 to amend the Internal Revenue Code of 1986 to clarify the treatment of locum tenens, LOCUMTENENS, locum tenens physicians and advanced care practitioners as independent contractors. So you're going to treat those folks as independent contractors to help alleviate physician shortages, including in underserved areas. So my first question to you, what is a locum tenens physician?
Well, considering I'm not a physician, I wouldn't know what the heck a locum tenens physician is. That's
what I figured. I could throw you a curveball on that one.
I'll bet you it is. Let's see, locum.
I looked it up. I know what it is. So let's see what you got.
Well, go ahead and what's the meaning of locum tenens? Is it somebody that's like a traveling doctor?
Kinda. It's just kind of like a temporary substitute.
Filling an office for a time or temporarily
filling in. It's a fill-in. You could use it like that.
Or a clergy. Like the Methodist ministers.
Yes, but that's a fill-in physician or whatever. That's just kind of helping out on a temporary basis. But they're going to clarify. One of the things that the IRS has been trying to get is they've been trying to clarify codify as many people as employees rather than independent contractors. They wanted to make it harder to be an independent contractor because employees are subject to tax withholding, independent contractors are not. And they're trying to say, people that they want to have more employees than contractors so they can get more withholding from more folks. But apparently they're going to let these fill-in physicians practice as independent contractors.
And the taxes always encourage or discourage a certain activity. So in this particular case, they're trying to encourage doctors to get into those positions that are basically a fill-in or temporary position to alleviate some of the challenges that are facing some of those rural communities and some of the smaller towns and cities where maybe a physician, general practitioner is not available on a regular basis.
Okay, well that's a doctor one. Now I've got a lawyer one for you.
Okay,
this will be S4318, a bill to amend the Internal Revenue Code to disallow any deduction for punitive damages. And for your favorite phrase, I'm setting you up again.
Oh yes, and for other purposes.
There we go. So that's S4318 to disallow any deduction for punitive damages. So apparently if you get, again, there's no text in here, so I can't figure that out. But just looking at this, it looks like if you receive punitive damages in a court settlement, that you're not going to be able to take any of that as a deduction, and you've got to pay tax on the whole thing. So that's just my that's my layman's interpretation of all we've got there on that one. But this is another one that just galls your gizzard about the way the government is trying to tell you what you can and can't do with your own money. S4314, a bill to amend the Internal Revenue Code to modify the eligible age for the exemption from the retirement plan early withdrawal penalty for public safety officers. As it is now, if you've got a retirement plan and it's one of these tax 401ks or 403b things, if you draw your money out early, there's a penalty for it. But now they're saying there's an exemption from the retirement plan early withdrawal penalty. Public safety officers apparently have an exemption from that penalty, and now they want to modify the age at which public safety officers can take that exemption. But then again, that's not only telling you what you do with your own money again, you're picking winners and losers. If you're going to let public safety officers do that, why don't you let the life flight helicopter pilots do it? Why don't you let your school resource officers do it? Why don't you let those locum tenens physicians do it? You know, that is just crazy how the tax code continues to pick winners and losers and try to dictate to you what you can and can't do with your own money. That's just crazy.
Right. And can you imagine, being the locum tenens and having to have the 1099 and now all of the federal, all of the taxes or all the tax burden is on you at the current level, which is a challenge for, gig workers and, folks that do primarily work through the non-employee compensation. It's what a challenge. And I think the big thing is that once folks figure out, hey, you know what, I'd like to keep my own money. I really just want my money on my hip and walk around and buy stuff when I want to, save some, and consider the fact that the people that will be available to pay into the revenue department up there in Washington will absolutely be more than doubled. What's 150 million on the tax rolls and 300 and some odd 350 million people plus travelers from overseas, tourists from Europe and everywhere else will start paying in to our tax system. It's insane that we would want to keep just taxing income when the potential for revenue to be collected by consumption would supercharge our economy and make us super competitive in the world.
All right, now I'm going to challenge your unscramble the gobbledygook skills. Okay.
Let me get.
I'm going to read.
Hold on.
I'm going to read this exactly as it's published on Congress.gov, and see if you can figure out what this says. S4312, the bill to amend the Internal Revenue Code. Now, pay careful attention to repeal the direct payment requirement on the exclusion from gross income of distributions from government plans for health and long-term care insurance. You want me to read that again?
No, I had to pull it up myself. I'm looking here on my screen now. My gosh. A bill to amend the Internal Revenue Code of 1986 always to repeal the direct payment requirement on the exclusion from gross income of distributions from governmental plans for health and long-term care insurance. Direct payment requirement on the exclusion from the gross income of distributions. Okay, so I'm getting money from governmental plans for health and long-term care insurance. I'm getting that money. And does that mean I can get a check instead of having it going directly into my account?
I don't know. I'm just telling you, since neither of us can really figure out what that says, we'll just leave that alone and move on to the second phase of today's program.
Great.
And I'm going to kind of toss this back at you and let you lead the discussion the rest of the way. You found two articles that are fairly similar to each other. What are we dealing with here?
Well, I got to thinking the other day, I'm sitting there thinking,
now that's dangerous.
Yeah, let me tell you how dangerous that is. We talk about the pros of the fair tax all the time on this program. And of course, we happen to believe that it is the greatest thing since sliced bread when it comes to moving away from the income tax, creating a tax on consumption through the fair tax. There are a lot of articles out there. I just picked the first two that I came upon, and they actually have a lot of similarities in how they approach what is the fair tax? That's the question. How it would work, and pros and cons. Now, these two articles came from two different websites. The first one, The College Investor, Investing and Personal Finance for Millennials. So this is a website that's geared to millennials. The second one is a website called Money Crashers. The article was written late last year, and essentially explaining the fair tax and then presenting the pros and cons. So what I thought I'd do, Bob, is we'll talk about, we know what the pros are. So let's skip down. And one of the things, this first one, the College Investor website says, credit going to Robert Farrington, who wrote this back in November at thecollegeinvestor.com. Fair tax is a tax system that eliminates income, blah, blah, blah. We know all that. Under the fair tax systems, individuals will no longer be required to file taxes. Individuals simply pay tax each time they purchase something. So if you're new to the fair tax, it's telling you that. The IRS would no longer be required to collect money from individuals, etc. Keep reading to learn how the fair tax would work. So it goes through all of that. Talks about pros and cons. The pros, of course, eliminates IRS filings, incentivizes savings and investment, less tax evasion, potentially boosts economic performance. Keep in mind, these are articles from people who are swimming around in the shallow end of the fair tax pool. We're out there with the information. People are talking about the fair tax. Now, on the College Investor website, cons of a fair tax system. It's not the fair tax. It's the way they look at it is it's the cons of a fair tax system.
Yeah, this sounds like something Jim Bennett ought to be listening to. He does his Grassroots Corner series on the hostile questions that can be raised against the fair tax. So Jim, if you're listening, here's an idea to check some of this out. But there it is: raises incentives for private businesses to cheat. Okay.
Right. So now they say that businesses who want to undercut the competition may decide to cut out sales tax collection. Not necessarily, as we know.
That ain't going to work, because I guarantee that the state departments of revenue who are enforcing the sales tax collection have got all kinds of tools to catch those kind of cheaters. Now, businesses will always want to undercut the competition, but just simply neglecting to collect the sales tax is going to land you in big trouble real quick. That's going to be extremely hard to hide from the authorities if that's what you're doing.
Because the button is already on the cash register. The button is already on the cash register for state sales tax. And it's typically calculated when you start adding up, especially if you're a restaurant and you have a local tax, or you have another tax. So it all comes out in the receipt. It's there. Yes, there would need to be some compliance, but it's not something that would happen. And the College Investor says this issue could be especially rampant when businesses deal with cash or checks rather than electronic payments.
Well, it doesn't make any difference. I know that
it's got to be entered into their cash register at some point.
Yeah, the enforcement agencies at the state level, they have a way of comparing, how much tax business A pays versus business B. They're in the same business. They're about the same size. And if one is reporting significantly less than the other one, there's a red flag that's going to send an auditor out there and figure out what's going on. Well, there's all kinds of comparisons and all kinds of data. So they know just from the size of your business, what business you're in, they can estimate fairly well how much tax you should be collecting and sending in. And if you're not doing it, they're going to come get you. So raises incentives to cheat. They may have incentives to cheat, but the tax system is not going to be one of them, because that's going to get you caught in a heartbeat.
Right. I can tell you that that people are going to try to figure out how to keep that percentage, the tax percentage. They're going to try to figure out how to keep that, or businesses are going to try to do what businesses are going to try to do sometimes, which is, or they may overextend themselves. At some point in time, that money is going to have to transfer from their cash register in the bank to the state. And then the guy at the federal level is going to sit there looking at the 52 states reports. And eventually, I think that you will find that the businesses will comply. So anyway, that was the first one. The second one is interesting, and it's a question that I have. Tax rates may fluctuate over time. Now, you and I have talked about
one question for you on that. Do you think that income tax rates remain stable and a consumption tax rate is going to fluctuate?
Well, and the writer and the folks that are swimming around in the shallow end of the FAIRtax pool here are in. We got them in the pool, and now they got the water wings on, and they're sitting there trying to figure stuff out. They're still trying to touch the bottom and not have to float out where we are in the deep end. Tax rates may fluctuate. Changes to consumption may drive up the tax rate over the long term. You're going to
changes in power shifts in Congress will change the income tax rates by a much greater degree than that. Again, if that's going to be a con of the fair tax, it is a super con of the income tax.
Well, and conversely, changes to consumption as folks figure out, hey, you know what? If I consume less, I'm going to be able to save more. So conversely, changes to consumption could drive the tax rate down, but it won't necessarily, because you're supercharging the volume of people that will be buying things that will convert into the consumption tax. The people you're going from the income tax pool versus the consumption tax pool at that point. So I think that's a little, I understand the concern there, but I don't think that it's going to be, something that, because we're going to go so far in the other direction that the folks in Washington don't realize that they're going to have considerable more money to worry about spending. And that's when the other side of this coin gets discussed and debated. So what the heck are we spending all this money for? And then you have another issue to deal with. Middle income families may see higher taxes. Bob, what do you think?
Well, I mean, any particular family under the fair tax may see their tax burden go one way or the other. I would say, though, that when you spread the tax base out, you remember the fair tax is designed to produce the same amount of revenue as the income tax.
Right.
So, but it's also going to extend the tax base out to people, who are working for cash under the table, who are, not reporting the fair market value of the stuff they steal. There's all kinds of evasion. The IRS admits now is nearly $1 trillion a year.
Right.
And so, but if you extend the fair tax to a much wider tax base and you keep the same amount of money coming in, that means each individual's portion of the overall burden is more than likely to go down, not go up. So yeah, it's possible that some people may see higher taxes, but in the great majority of cases, just the fact that you're widening out the tax base is going to tell you that most people's taxes under the fair tax are going to go down. Now, people that are really wealthy and are taking advantage of a lot of tax breaks and stashing their money offshore, those are the folks who are going to be paying more under the fair tax because their spending is going to be taxed. There's no exemptions, no loopholes, no deductions that they can get away from. So I see the fair tax hitting the wealthier people higher than the middle class, no doubt.
And I think it'll bring a sensibility and a stability to consumption in general. You are going to be more careful about what you spend and where you spend it and how much you spend and when, so that you have the ability to save money. It'll be people would be turning around. And this is what I think the college investor is geared towards millennials. And the website itself. There are a lot of articles out there specifically about savings and earning more money in personal finance and so on. I find it that generation and even younger are going to be the folks that really benefit over time for a tax on consumption, the fair tax. Than anybody else. I really do. And I think they understand it better and will as they continue to delve into it. So I think this is really great that the fair tax, a tax on consumption, is being talked about in articles that are reaching people that can go out and say, you know what, this is we really need to do this. Why are we doing it this old way?
I'll tell you, this next point looks like the author is just really grasping at straws, trying to come up with something to portray himself as a fair and impartial somebody who's trying to show you both sides of the issue in a fair and impartial manner. And we got to have as many cons as we have pros. And he says that the cons of a fair tax system is a potential dampening effect on overall economic growth. Now, that is absolutely 100%, 180 degrees wrong from every economic study that has ever been done on the effect of the fair tax on the economy. You hear the term rocket fuel for the economy. Would you make the United States the world's tax haven, and all of this business and the jobs that come with it come flowing to our shores because they no longer have to deal with a corporate income tax? That is going to have a tremendous positive effect, not a dampening effect on economic growth. So I'm chalking that one up to this guy's just trying real hard to look like he's being fair, and he has no clue what he's talking about on this one.
Well, and the first three words of the little couple of sentences at the as that is explained out, with prices higher, there is an assumption in his thought process here that prices are going to be higher. And
even if they are slightly higher, you're still bringing home your whole paycheck with no withholding and no payroll taxes. Your purchasing power, even if the price is actually high. In fact, I think Jade addressed an example like this with the price of a new Tesla was probably going to be a little bit higher under the fair tax once the fair tax replaces the embedded costs in there. But when you look at how much you have to earn to buy that Tesla under the income tax system, it's a lot more than the price of the car. But with the fair tax, even if the price is slightly higher, you have to earn a lot less because all you have to earn is the price of the car. You don't pay taxes on what you make. And so even if prices are a bit higher, your purchasing power with the fair tax is going to be a lot higher because you've got your whole paycheck. You've got the prebate every month. You're going to have more money in your pocket. And again, this is a straw he's grasping at in an effort to look fair.
I totally agree. And again, this gives us in the FAIRtax volunteer universe an opportunity to seek out articles and discussions that are going on in that are focused on, for instance, the College Investor is focused on financing and planning for millennials. For us to be able to go and reach out to Robert Farrington, and thank you, Robert, by the way, for considering the fair tax and actually spending some time on it. We can tell that you did that. We need to meet. We need to get together with Robert Harrington or Farrington. I can't remember what Farrington. I'm sorry, Robert. We need to get with these guys and gals that are writing these articles and say, hey, look, this is what it's all about. We want to help you understand and have a nice, honest debate about where this is coming from.
Well, we need to turn on. We need to turn on the turbo speed here. We got about 4.5 minutes left and another article to look at. This is from moneycrashers.com.
Yeah.
And if you scroll right down to the disadvantages of the fair tax, and again, this is somebody, it sounds like he's trying to be fair and show both sides of the issue. But again, especially, I'm going to skip straight to this second point. This guy has absolutely no clue what he's talking about because he lists as a disadvantage of the fair tax increasing potential for tax evasion. We mentioned last week's show, Jade Walley's paper on tax evasion. Jade Walley, a very learned CPA guy who deals with stuff like this all the time. He looked at it and concluded the fair tax would result in a 95% decrease in tax evasion, not increased tax evasion. So this one you'd almost have to just dismiss right off the paper.
Right. As a consumer, how would you avoid paying taxes that way? I mean, you're going to go buy a gallon of milk or pay for a movie or go buy a car. How you go out?
To evade the fair tax, you'd have to have an accomplice working at the store.
Right.
And, but both of you will get in trouble for doing that. So to think that the fair tax is going to increase the potential for tax evasion, that is just flat out wrong. Sorry.
And then number 3, eliminating tax deductions and credits. Currently, many tax deductions and credits incentivize, think congress.gov, specific social policy goals, such as buying a home, giving to charity, getting a college education, etc. The fair tax's prebate is designed to make up for those lost deductions. However, because it's given to all households rather than encouraging people to spend their income in certain ways, people may be less motivated to take certain actions that could benefit them in the future. So what he's saying is, well, we need the federal government to kind of guide us in the right direction as to how to live and how to spend our money, et cetera, et cetera.
Sorry, I will make those decisions for myself. Thank you very much. If I give money to the church, it's because I want to, not because I'm getting a tax break for it. In fact, I take the standard deduction. I could give a lot to charity. It wouldn't do any good because
I'll tell you
from a tax burden, because I don't take the charitable deduction.
Right. Well, let me tell you something here. This is important because young people today are probably more socially engaged than any other group that I can remember, as far as caring for each other and their fellow man. Not that we don't all do that, but I mean, it's an immediate, purposeful action, and I see that in a lot of young people. They're certainly, are not going to necessarily be not taking care of their fellow man or helping with the church and doing things. And it doesn't necessarily have to be within a church function. It's just, hey, here's a guy on the street that needs some help. I've got a few bucks. Let me help him out. Depending on too much on spending. Well, the tax is dependent on spending is what they're saying. The fair tax is. Wealthy individuals already invest on their own in another business. They may be further motivated to do so. Those moves could benefit the economy overall, but since these activities will be non-taxable, the national burden shifts to the lower economic classes.
Well, the lower economic classes are not buying Learjets and yachts. I'm sorry.
Right. And so if you buy a Learjet or a yacht under the fair tax, you're going to pay the tax at the cash register.
If you buy a new one, a used Learjet would
not cost it, right. So that would be an interesting debate for another day. Is we need to talk to somebody about what happens to all the new stuff that nobody's going to buy.
Maybe that'll be
quickly.
Maybe that'll be a good topic for Jade to attack on his next Wally's World. Okay. But I tell you, we are flat out of time again. So certainly appreciate coming up with this. The Money Crashers was one, and the collegeinvestor.com was another one. Folks can go out there and check that out. But until we meet again, we're going to have to wrap this up. Thank you so much for watching and listening. I'm Bob Paxton.
And I'm Bob Scarborough.
The Fair Tax Guys reminding you again that the fair tax is the only truly fair tax. And once you understand it,
you will demand it.
The Fair Tax is a tax replacement plan where we take all the federal income taxes, including corporate, personal, gift, and estate taxes, and replace them with one national consumption tax on new purchases above the poverty level only. This form of consumption tax comes with no exceptions and is progressive, not regressive. The poor are not paying more, and the rich are not paying less. What makes it progressive is that all Americans are untaxed up to the poverty level via the prebate, much like your standard tax deduction. The taxes are collected by retail businesses at state level, so the system is more accountable. The IRS is done away with, and you have control over your money and what the overall tax rate your household pays. The fair tax is revenue neutral, so the government receives the same amount of money as they do now, and it's fair because you decide what's fair, not them. To learn more, visit FAIRtax.org and be sure to like us on social media to help educate your friends and spread the word.